Welcome to The Explainer. Today, we're trying to make sense of a market that feels, well, both totally euphoric and absolutely terrifying at the same time. You've got these huge, powerful trends pushing everything up, but then the day-to-day, it's just pure chaos. So let's try and unravel this tale of two markets. And look, on the surface, the story seems incredibly bullish. I mean, you've got some of the biggest names on Wall Street coming out and saying this tech bull market has a long way to go. The thinking is, hey, the party isn't just continuing. It's got years left to run. And honestly, you can see why they're so optimistic. Just look at this number. In 2025 alone, the market has already hit 41, that's 41 record highs. That's not just a little rally, right? That's relentless, pure upward momentum. It shows some serious conviction from buyers. And the experts, they're all arguing this is not some dot-com-style bubble about to pop. The way they frame it is we're still in the second inning of a 9-inning AI game. So if they're right, well, it means this massive technological shift that's going to reshape our entire economy, it's really just getting started. Okay, so that's story number one. The first tale this market is telling us is one of just incredible, almost undeniable strength. It's this huge narrative, driven by these massive long-term tech changes that are only just now starting to play out. And you know what? This optimism isn't just locked into tech stocks. Nope, it's spilling right over into digital assets. The story in crypto is all about big money institutional adoption finally becoming a reality. It's about the tokenization of literally everything. We're talking stocks, bonds, real estate, you name it, all moving onto the blockchain. And then you throw in this AI spending boom that's just creating a tidal wave of new cash. But here's the big paradox, right? If everything is so fantastic, if the future is so bright, why does it feel so awful day to day? Why do so many investors feel completely disoriented, like they're just being tossed around in an emotional washing machine with absolutely no clear direction? All right, so let's get into that second story, the one that's unfolding just beneath the surface. This is the messy, chaotic, and frankly, frustrating reality that explains why so many of us feel like we're just going nowhere fast, even with all these amazing headlines. So what happened is, after a really massive liquidation event, the market got stuck in what traders call a post-liquidation range. And this is just a notoriously awful environment where the market basically just goes sideways. It's just stuck, trying to digest that huge crash and figure out where to go next. And in this kind of range, nobody wins. It's brutal. The bulls, they get teased with these powerful rallies that look amazing, and then, poof, they just fizzle out the second you get excited. And the bears, they get teased with these sharp drops that look like the big one, and then suddenly they aggressively reverse higher. So the result is just pure frustration. It's a market that just churns accounts. It doesn't create any real trends. And what makes all this confusion even worse is this really maddening pattern we're seeing. Absolutely fantastic, blowout news just isn't pushing prices higher. In fact, a lot of the time, it's doing the exact opposite. I mean, we've seen this everywhere. Palantir reports what analysts called a Picasso-like quarter, and the stock tanks 9%. XRP launches a game-changing new sidechain, announces billion-dollar deals, and its price gets hammered, down 35% from its peak. It is the absolute classic definition of buy the rumor, sell the news, and it leaves anyone who reacts to the actual good news just holding the bag. Okay, so to try and find some clarity in all this chaos, we've got to look past the day-to-day noise. We need to see what the professional, the institutional money, the big money is actually thinking, and maybe more importantly, what they're doing. And this is really telling. A recent survey from Coinbase asked institutional investors where they think we are. And look at this, almost half of them, 45%, think we're in a late-stage bull market. Now, that's a crucial distinction. It means they're still optimistic, yeah, but they're also getting way more cautious. They think the easy money has probably already been made. So what's keeping them up at night? Well, it's not a tech bubble, and it's not some crypto-specific problem. Their number one worry, by a pretty huge margin, is the broader macro picture. That's the source of all this caution. But here's the thing. Despite all those worries, they're not just hiding in cash. Not at all. The big institutions are playing the long game, and they're focusing on some really powerful emerging trends. They're watching things like digital asset treasuries, or DATs, which is basically a whole new source of steady demand. They're jumping into real-world assets, RWAs, as traditional finance starts moving on-chain. And they're definitely noticing the breakout success of things like prediction markets. Okay, so let's drill down on those macro storm clouds, because this is what has big money so concerned. This is the real source of all that anxiety, and the reason for this frustrating sideways grind we're all stuck in. And that brings us to the big wall of worry that investors are trying to climb right now. You've got the Fed signaling that rates are going to stay higher for longer. You've got a super strong US dollar that just chokes off liquidity for riskier assets like tech and crypto. And the rally itself, it's incredibly narrow. I mean, in crypto, something like only 6% of the top 100 coins are actually doing well. And when only a handful of things are going up, that's usually a sign of a pretty fragile foundation. So all of this leaves us with a market that is just defined by this one fundamental conflict. It's a battle, really. A battle between this powerful, super optimistic story about the future and a very difficult, kind of pessimistic reality of the present. And the conflict really boils down to this. On one hand, you have these truly generational, multi-trillion-dollar stories, like the AI revolution and the tokenization of all finance. I mean, huge stuff. But on the other hand, you have these very real, very immediate headwinds, a hawkish Fed, a strong dollar, and a rally that's only being held up by a few names. And that right there, that is the ultimate question for the rest of 2025. In this epic tug of war between a beautiful long-term narrative and a brutal short-term reality, which one is going to break first? Because understanding that conflict, that's the real key to navigating this emotional washing machine and finally finding a little bit of clarity.